I asked to Mr. Jean-Yves MUYLLE, Head of Unit of DG Market, Retail Financial Services and Consumer Policy, to try to do an exercise to check if in the next month of years program of the Commission, there is the possibility of one or other of these priorities can be reached at the EU level or at the national level. I give you the floor, Mr. MUYLLE.
Thank you very much, Bernard. It's a pleasure for me to be here today, and I would like to thank you for the invitation and to congratulate you for the organization of this conference. I think this type of conference, in particular where people can exchange national experiences, is of very high value, not only for the participants but also for policymakers, as we are in the European Commission. It's always a bit of a challenge to give some concluding remark on a conference on a Friday afternoon, just before what will be a long weekend in some countries, and in particular where the sun is shining outside, which hasn't happened very much in Brussels over the last couple of weeks. But nevertheless, I will try to respond to your query, to comment on your recommendation and priorities. I'm coming from the Directorate General responsible for the internal market and services, and we do see a clear link between the issue of financial inclusion and the internal market and the integration of the domestic market into a single internal market. These are two mutually supportive objectives. I think it is important to create a market to the benefit of all those who can participate in the market, not only business, financial institutions, but also consumers. And there is absolutely no reason why people who are socially or financially excluded could not benefit from the many advantages brought forward by the integration of market, the creation of an internal market in terms of innovation, innovative product, lower price, and wider choice of product. From a Commission perspective, our focus has been for quite some time on the issue of retail banking, and in particular the issue of access to a basic payment account. There is some good reasons why we have focused our attention to this segment of the financial services sector. As we all know, a current account, a payment account, is very often a gateway product to other financial services, such as credit, such as savings. If you want to get a credit, you will be asked to have a payment account. If you want to save, if you want to get some savings in many institutions, they will also require a payment account. But it is also a way to take advantage of the innovation on the payment market, where increasingly some safer, more secure, and cheaper means of payments are being offered, are available to those who have a bank account, and there is no reason to exclude part of the population from these advantages. More and more also we see some public administrations requiring beneficiaries of social benefits, pension, to have an account because they don't want to pay in cash anymore. Because cash is quite expensive. It is expensive for the society. It is also expensive for the payer of social benefits. So in some countries, there is no requirement for all beneficiaries to have a payment account. So these are all reasons to address the issue of access to payment account and bank account at a European level. We have identified this priority already back in 2007, and this has taken some time to materialize. And after some lengthy preparatory work and internal debate, the Commission last year recommended to all member states to put in place a system to ensure that any consumer could open a bank account with certain basic feature, irrespective of their financial situation and irrespective of their place of residence. I mean, this is also an important issue because we see that in many cases, non-residents are being denied access to a payment account just on the ground of their place of residence. The Commission approach has been heavily criticized at the time because it was a non-legally binding instrument that the Commission had adopted, and some groups of stakeholders wanted to go one step further and to have in a law, in a regulatory text, this principle enshrined. Nevertheless, the Commission considered that a recommendation was the most proportionate means to address this issue in a first instance, but also made it clear at the time that if member states would not take the measure to comply with the recommendation, the Commission would not hesitate to act. And almost 1 year later, the preliminary assessment we can make at Commission level is that the situation has not improved or significantly improved across member states. Member states were due to comply with the recommendation by the end of January, sorry, and the assessment we can make on the basis of the feedback we have received from the member states is that it's quite disappointing. We face a patchwork of systems across the member states, but from the information we have received, we can conclude that approximately half of the member states have absolutely nothing in place and are not considering putting in place any sort of regulatory or self-regulatory initiative to ensure access to some form of payment account. 25% of member states do very partially comply with the recommendation, and another quarter, the last quarter, can be considered to comply with the main features of the recommendations, which, as I said, is quite disappointing. Member states were given the opportunity to put in place a system with some flexibility according to their national specificities, but 1 year after the adoption of the recommendation, we can just see that the situation has not significantly improved. And those member states which today sort of comply with the recommendation, in many instances already complied before the recommendation. So the recommendation hardly had any impact except in 1 or 2 member states. So the Commission is currently finalizing its assessment of the situation and is therefore assessing what alternative ways should be put in place to ensure access to some form of basic payment account. A colleague of mine who attended this morning discussion identified 3 main points from the first panel, which we will certainly consider when we will work on the follow-up to this recommendation. The first one is who should be the beneficiary of these potential regulatory initiatives. Should we ensure access to some basic payment account to all citizens, or should we only focus on those citizens which do not yet have a payment account in the member states concerned? The approach of the Commission has been to focus, in its recommendation, has been to focus on those which do not yet have a payment account in the member states, but there seems to be some, or at least this morning, there was some call for a much broader approach and to make it available to everybody, irrespective of whether they have an account or not. The second main issue is the question of the fee, which I can understand is a very sensitive one, where there was some call, I think, for taking into account the diversity of the fee structure at national level. I think we would all like, well, I mean, we citizens would all like to have a bank account for free or free of charge. This may not necessarily be a reasonable way forward, but on the other hand, we have to avoid a situation whereby excessive cost or disproportionate cost would make the access impossible for certain classes of the population. And the third main point, which was reported to me, was the question of the buffer and whether there should be a possibility for some overdraft or not, even if very limited. Again, this is a possibility which exists in some member states. I have in mind Denmark, if I'm correct. But this is certainly something we'll have to assess. But if there is any possibility for overdraft, which is not currently in the text of the recommendation, I think the overdraft would have to be very limited, or limited to a very small amount. So these three issues have been identified from the morning discussion. We will certainly consider them in the follow-up to the recommendation. As you all know, the Parliament is also finalizing its resolution on the issue. The vote will take place in early July, according to our information, and they are very supportive of our efforts to go further. And I think this support is very much welcome, because I cannot guarantee that at the member states level or at the council level we will get the same level of support. If I can, from what I can see from the preliminary discussion we have with the member states representative. In parallel to this work on access, we are also working on an initiative to improve the transparency and the comparability of the fees and of the terminology used for bank account fees. I think this is also a priority which you had identified in your banking section. This is a priority for us. Transparency is already ensured by a directive, which is called a Payment Services Directive, but you can be transparent in your own way, which means that you can have transparency at the bank level, but you would not necessarily have a transparency at a market level, because if everybody is transparent in its own way and you cannot compare the fee for the same product because the product or the service has a different name, it doesn't help much. So this is why we paid great attention to this issue. We had invited the banking industry to work on a self-regulatory initiative, which unfortunately didn't lead to a satisfactory outcome from a Commission perspective. And my Commissioner, Commissioner Barnier, together with Commissioner Dalli, responsible for consumer policy, decided to start to launch a regulatory initiative on the issue to, as I said, ensure the comparability of the fee by defining a standard terminology for a list of services offered and a standardized price list, to invite the banking industry to develop a glossary so that people could understand exactly what they're paying for, to develop at national level comparison website where consumers could compare the different offers by banks, by credit institutions, and to oblige the banks to provide ex post fee statement every quarter, every year, every semester, so that people could have a very clear idea about the fee attached to their bank account. This initiative will be coupled with an initiative probably on bank account switching to facilitate the switching from one bank to the other without going through the hurdles, the administrative procedure, and to have a stronger competition at retail banking level in the member states. This is for banking. I think I have replied to your 2 recommendations there. I will briefly mention credit. There are some very good and relevant recommendation or priorities you have identified, such as to allow anyone to access affordable credit when they are affordable to them, and to have credit providers comply with rules and regulation and not to exploit low-income people. As you may know, there is already a framework in place at European level for consumer credit, which has been in place for some time now. The consumer credit covers revolving credit, which I think you asked to be regulated. Revolving credit is regulated, maybe not in the way that you would like it to be regulated, but it is subject to the Consumer Credit Directive. And we are now in the process of hopefully concluding some agreement on the mortgage credit directive. And one important element for both of these directives is the duty to carry out a creditworthiness assessment, which I think is an important element to avoid over-indebtedness and poverty trap. At least the mortgage credit directive should also be seen as being a response to the crisis, but also a way to ensure more responsible borrowing from the consumer, more responsible lending from the credit institution side, but also more responsible borrowing from the citizens, the consumer, the borrower perspective. Microcredit is also an issue which we are looking at now in the European Commission. We have organized a conference last December, if I'm correct, on microcredit to look, as you have done today, a little bit at the situation in the different member states and to see whether there is any appetite and whether there could be any possible benefit from creating a light regulatory regime for microcredit institutions at European level, so as to allow them also to benefit from the internal market and to benefit from a passport where they could also operate in a number of member states. We have to be very careful here. There might be some benefits, there might be some drawbacks, which we would have to avoid, of course, by having too strong regulatory regime, I would say. We haven't taken any decision. We are consulting the member states to get a better idea about the regime in place. There aren't that many member states actually where microcredit are being regulated and supervised. So this is an area where under investigation, I would say, but certainly the objective is to encourage and develop microcredit and not to take any initiative which could refrain the development of microcredit. So these are just a few examples of how the Commission could or would react to your initiatives. Our scope of action is nevertheless quite limited, and I noticed in your priorities that there was some encouragement to member states to develop and to take action at national level. But for some of your priorities, I think the right level is probably better, is probably the national level and not so much the European level. But it is clear that the European Union and the Commission can play a sort of coordinating role and can coordination, exchange of best practices, better knowledge of the systems in place in the other member states, and this is something which we have started doing for microcredit, for instance, and which we could also consider for other segment of the retail financial services sector, such as savings, for instance, which I have not mentioned. So I will stop here. Bernard, thank you very much for giving me the opportunity to inform you about the possible initiatives which the Commission could take. I hope I haven't been too long. The sun is still shining, so no problem. Thank you very much.